Good morning, traders. Welcome to today's market review. This is Fred Razek at CM Trading. Today is March 25th, 2019, and today is Monday morning. So looking at the major economic events of the day, nothing scheduled for today, but as the week moves on, we'll have a bunch of very important numbers coming out, including consumer confidence number coming out of the United States tomorrow, which is a very, very big number. Now looking at the markets, we're looking at the dollar strengthening against the major pairs except for the GBP and the Japanese yen. We'll take a look at that. And the Dow Jones sold off tremendously last Friday in recessionary fears, not in the United States, but in Germany and Europe. We had that flash manufacturing number that came out on Friday, and there was a little bit of a concern there, so the market sold off. Now, ultimately, technically speaking, we were right there, but we'll take a look at that as well. Commodities, oil retraces below $60, trading together with the Dow Jones, and gold is still trending upwards. We had a question whether or not it would last week, but it does continue its upwards trend. And lastly, looking at the stocks, Boeing gaps below its resistance level, which was really important. We'll take a look at that. Now, Apple and Amazon, which were the stronger stocks on the board, sold off as well. So it looks like there's a little bit of a correctional move in the markets, but let's take a look at what we can expect from today's trading. So we're looking at the Euro USD at a 4-hour chart, and as you can see, we sold off to this bottom range of 1286. Now this is what I call choppy trading, okay? And the reason it's choppy trading is because there's no directional move in either direction. Now if we look at a daily, I mean, we've been within this 114.18-ish level and 111.80-ish level for quite some time, okay, since October of 2018. So, within this area, we're trading in a really tight range for the Euro USD, okay, really not trading in a big area. Now, like, just to emphasize this point, like, look at this graph, okay? And this graph is where we've been over the past, couple of months, few months since 2018. We've been sliding downwards, but we're really just within this area, okay? So, when we had these moves up here and we even had this move and this move, it was ranging, okay? Even there, okay? It was ranging. And right now, it's just been very flat, very, very tight range. So with that said, I try to push myself away from the Euro USD because it's not trading as volatile some of the other and other currency pairs, excuse me. Now looking at this area, we're trading at 113 flat right now. We look like we're bouncing off of it, so it could be that we'll bounce and we'll continue trading within this range, or maybe softening later today, okay, with the anticipation that the German economy is softening. Looking at the GBP USD, it's strong, okay. Looking at it, it's relatively strong. It's trading sideways, where the Euro USD is trading more on the downside, okay. So relative strength in the GBP and relative strength in Japanese yen. As you can see, the yen getting stronger here versus the dollar as opposed to getting weaker, which is what the rest of the market is doing, okay. So ultimately here also, we're pretty much been trading within this 111, 114-ish level for a long time. So it's been in a tight range, okay, as well. So, nothing really to write home there. Now looking at the Aussie USD, we sold off a little bit. We're jumping off of this area right here. So everything versus the dollar has been really in a tight range, basically. Okay, so nothing really jumping out and saying, okay, this is a clear buy. I mean, we are in the bottom of this range right here. 70.65 is the bottom. We're about 20 pips away from that. If this does rally today, maybe we'll see a correctional move in the dollar. Now looking at the commodities, which I'm going to jump to gold right here. Now we set this graph up last week. On Thursday and Friday, we mentioned this, that it looked like it was going to trade within this area, okay? And I said if it doesn't break this trend line, okay, this trend line that we set up right here that continues in this area, we will continue upwards. Now this must, okay, and I really say, I emphasize this must break above this 1318-ish level, okay, for this to continue going up, okay? So if it may just, capitulate here at 1318, excuse me, and then make a sideways trending area, but it does need to continue upwards in order to maintain that area. So just be aware that if it does continue, then it's a solidified buy, and its next resistance level is at 1313. Now looking at oil, also it's been kind of quiet sold off below $60 a barrel. Okay, we're about $2 away from that. Nothing really to write home about. Next support level is $58 a barrel, so about 67 cents away from that. But looking at the greater markets, okay, now looking at the Dow Jones, we had a very sharp sell-off last Friday from 25,800-ish level down to 25,400, and we're just trading at 24,445. Now looking at a daily chart, and this is really what I want to emphasize, if we don't bounce above this area, this 23,400-ish level, we could see it continue down further. 25,191 would be my next area. Now, this is a solidified resistance right here at 26,000. So the question is are we going to break this 25,400-ish level and then, sell off down to 25,000, or are we going to sideways trend? Okay, now a big thing that's going to add a lot of weight to this is tomorrow's consumer confidence. So we may just see it trading sideways for today and trading with light volume if the selling doesn't continue, and then we may see some surprises tomorrow. Okay, consumer confidence still in the States is pretty strong, and that could be seen from the NASDAQ. Now, the NASDAQ really rallied beautifully this past year. Since its debacle sell-off back in December, we've gained over almost 2,000 points, okay, 1,500 points, excuse me, since our low. So, with that said, that's a pretty big correction, okay, very, very large correction for the NASDAQ. Now, the NASDAQ is mostly the computer stocks, the Apple, the Facebooks, Amazon, so on and so forth. So they add a lot of weight to the NASDAQ. So it's been strong, okay, which means that if it continues to get strong, if it continues, we may see, this part of the market actually pulling everything else. Okay, so with that said, now let's jump into Boeing really quickly. Now, this is what I want to emphasize right here. Now, this was the debacle with the Ethiopian plane that went down, okay, just a couple of weeks ago, and we traded with this flat line at 368. And we broke it, okay, we broke it quite sharply to 362. And the next real support level is 354, 348-ish level. Okay, these are really next support levels. So, if we do see continued selling, this would be the one that I would look for the selling today, and to continue selling off here to possibly 354, 342. Now, there is way for it to go down to 300. Okay, this is where we were last December. The question is, it's mostly news related. It's mostly, stuff that is, can't qualify to numbers because you're not sure about the final ripple effect on the Boeing company from this plane crash. Now, looking at Apple, I did take a little bit of a slide last week, so nothing is really holding, so strong in the markets that I'm going to say, okay, we're going to have a correctional move on the upside. I think, everything taking into picture, I think there's a lot of people taking, money off the table as we capitulated in the market to 26,000. You got to take stock of where you're at, okay? And then you got to ask yourself, probability wise, is it smarter for me to take money off right now? Is it smarter for me to be in a position? And I think just for right now, for people who were long, some of the stocks after the correctional move from December, I think people are taking money off the table. This is Fred Razak. I want to wish you guys a great trading day. Thank you.